So, good morning, active traders, and welcome to our Trading Week Ahead broadcast. I've been doing these for over a decade, Saturday, here on Saturday, December 11th, 2021. I hope that you're making some money trading. We've had some really good volatility lately. Markets had been down week before last. They were back up again this week. We've got Fed Chief Powell coming out to speak on Wednesday. So I'm going to hold off. Trader had asked about swing trading. You always want to hold off trading right before the Fed, right? So for swing trades. So for that reason, I'm not going to put on any new swing trades till after Wednesday afternoon. I might put on some initial trades. I'm keen to get into Pfizer and Ford especially. F is my favorite ticker right now, and we'll be looking at that coming up in a minute. Before we get started, or as we get started, just a reminder, if you're not yet a member of my live Trading Open live room, I've ran this over 21 years now, just over 20 years. And so you're certainly welcome to give it a try or get some information about it. At least it's at trademastery.com/live. Or you can just go to tradingtheopen.com and that'll forward you to this page as well. Anyway, let's go ahead and take a look at our broad market. The S&P has been climbing up out of the gutter here this last week, but we're still under this bearish engulfing resistance area near the 4750. So that's a bearish engulfing, and it says don't buy me until it gets above and holds above that upper candle there. So make sure to learn candles from my colleague Steve Nissen at candlecharts.com. I do. He teaches me so much. 20 years now I've worked with Steve. Anyway, that's kind of a shooting bearish engulfment. So we got the drop down to the 50 SMA, consolidated, perched back up here. This would be a really stupid place to buy the stock market. This is the horrible place to buy the market because it's right under a known resistance area at the 4750. S&P key target levels. We're going to use 4752 as R1. So I'm not going to play the market long significantly on any size at least until we get over 4752. And for support, I would use right under this previous lower candle, which not coincidentally confirms Tuesday's lower candle right near the 4620 or so. So I'm going to use 4620 as S1, support 1, and 4752 as resistance 1. And in the meantime, you really want to stay clear until the market either reestablishes a continued uptrend or it rolls over and goes south and sells off after Wednesday's Fed meeting. All right. The other thing we always take a look at is our Volatility Index, the SIBO VIX. And you can see we're back down at just under 19, right? We closed at 18. Where's the VIX? Trying to find this in my list of goodies here. 1869. It's at the bottom of my portfolio list. So sold off sharply on yesterday's session. I did buy, however, 200 shares of UVXY, just a small starter trade. The UVXY down here because you buy low, sell high. And our UVXY is getting close to the 52-week low of 1430-ish. So for that reason, I bought volatility on Friday. And especially if the response to Powell is negative on Wednesday, this thing will spike right back up again. So that's why I'm trading that. So do keep an eye on the VIX. I'd be using 18 as S1 and 15 is S2. So support level 1 is 18. What that means to you as a trader, is that we want to start looking for long plays if the VIX gets under and stays under 18 after Wednesday. Okay. However, if after Fed Chief Powell speaks and the market goes wild and the market goes boom, you want to make some money potentially. You want to look at trading the inverse instruments. And in my live room, we cover UVXY and TZA pretty much daily. And I trade them daily, so that's why. So if the VIX gets back over, say, 22, I'm going to use 22 as the threshold for the resistance. La resistance. If the VIX breaks 22, the market will at that time be crashing and burning, or at least going down a bit. That would be a good place to, number one, get out of equity positions. And number two, either buy index puts for weekly S&P puts and or buy inverses like UVXY, VXX, SQQQ, TZA, and the rest. So that's the trading strategic plan for next week. Big picture. Now let's take a look at some hot charts. One that, not to say I told you so, but I made over $1,000. Granted, it's not a fortune, but hey, pays for the food. It made 1,000 selling 1310 in KOLD. Remember I had mentioned to you good folks that KOLD was a screaming buy the last 2 months? It still is, but I sold 1310. I'm still in a little bit, but I'm going to rebuy if it does continue up. Remember the last month or so, I'd been telling you, told you so it would be a good play on a breakout. And sure enough, it was. It ran all the way from 8 to 12. So a 50% return plus if you listened to me just 2 short weeks ago. How many of you have been trading cold? I'm curious. I got a lot of you here this morning. And you remember, hopefully, I'd been showing you this chart. I'd been telling you the last 2 months, cold is a screaming buy down here in the 6 to 8 region. It doubled right up to 12, 13. I sold 13.10, made over $1,000. I want to trade much larger size and scale in aggressively on this. But remember I said big picture exit targets right under the 200 SMA near 18. So for my next trick, I want to buy back in on some size over 14 and sell in the 18-19 area with resistance near 20. And I'll be covering specific entries and timing on that in the live room. Again, just a reminder, if you're not yet a live room member, why not? You should be joining now at trademastery.com/live. I've been running Trading Open for over 2 decades. I'm very experienced as a day trader. I trade daily as often. On average, I do 30 to 40 round trips. On an aggressive day, I may do 80 up to 105. There was a recent record. But typically, I do 2 or 3 dozen round trips daily. I like to scale in and out with relatively small 2, 3, 400 shares at a time positions with anywhere from 10 to 20 cent trailing and hard stops. And I tell traders exactly how to trade. What's neat is, and if you are a live room member, you know how well this works. One of the things that's a key feature for my approach for running a room is you get specific entry triggers on whatever's hot that day delivered on a silver platter before the bell, and then I update them in market. So you get specific price triggers to practice with using a demo account for educational use only. I'm not making trading recommendations, but anyway, I do give you specific, not only the instruments that are worth trading, the tickers, but where and how to trade them. And that's a key difference between me and everyone else. Most of the other, actually everyone else running a live room is not good enough to give specific entry triggers because they don't know how to trade. I know how to trade, so I give you guys specific entries, and live real time, even more valuable, is where to trail a stop and where to exit, whether it's a small stop, a break even, or a nice moderate win. So those are the type of things that my traders find valuable at Trading the Open. So do give it a try. Even if you've tried the room before, normally I ask that you only do 1 trial because that should be enough for you to get a good, honest first-hand look over my shoulder of how I trade and some of the strategies and techniques that you'll be learning. But because we just moved over to Zoom a couple weeks ago, I'm hitting the reset button. So you too can rejoin if you've already done a trial. You can retrial it if you want. Good. That offer is good for between now and the end of December only. So sometime over the next week or 2, do be sure to grab your spot, and I will see you there. All right, what else? Back to our program. And hopefully I demonstrated competency by giving you this. This is my favorite play that I made over $1,000 on a silver platter here in the Trading Week Ahead broadcast. Well, a lot of you saying cold. That's good to hear. Hey, Gautama. Let's see. Question from my experience, does market trend higher till end of the year? It all depends on the market. Typically, December is a bullish rally month, but anything's possible. With the Powell speaking and record high inflation and all the other problems we have, it's supposedly a good economy, but I don't predict, I react, because I find when I predict, I'm usually wrong half the time. So it's a coin flip. So it's better to just react to what price action's telling us. Like this cold winter, right? That's a good play. What else? If we take a look at gold, it's always good to keep an eye on what the heck gold's doing. I'm still waiting for a move up in SCO, or short crude oil. That did also do the nice little bounce there, and I sold into that, but it went right back down again. I am eager to get back into SCO. Whenever crude drops, SCO, the short crude oil ETF, spikes up. And it's got lots of room to run if crude ever does start to drop again like it did a week before last, right? So that's kind of the first shot across the bow that there may be some erosion in crude. It had been dropping. This well may bounce up again reasonably soon. If we take a look at in our final commodity, we always look at oil. Recently we're looking at natural gas and gold. And you can see that dust has been going up here, kind of cycling up and down. This is the inverse ETF. We kind of zoom in on this. Gives a little better picture. Having a bird's eye view. This is what the opposite of gold has been doing. This is the inverse gold. If you look at, for example, GDX, our gold instrument, you can see that's been obviously the opposite chart. That's going to be going down here lately. So they've been selling gold ever since middle of November, and I would not be keen to rebuy unless we get back over these moving averages near the 32.5 or so. So gold's a short. We're going to see if it continues on down under 30. We'll see where it goes next. Let's see, we'll look at a couple of swing trading charts, and then we'll change channels to our day trading charts, as always. Trader Polly just asked about two charts, TOL. This one looks brilliant, a great chart. I like this chart. I applaud you for that one. TOL is definitely a good breakout pattern. But again, I'm not going to initiate any new swing trades in my own capital trading accounts until after Powell speaks on Wednesday, because he may tank the market. So why am I going to put on trades when there's a known potential market moving event coming up? Kind of like earnings release. You don't hold into that because the gap could go against you. We could get a gap against us come Wednesday at 2:30. So I'm going to hold off on that. PG, Procter & Gamble, I believe, is also up nicely. A little pricey, but it's a brilliant chart. Went all the way from 140 to 156. Good consumer staple, steady grinder to the upside. Much like Costco, another good consumer staple that's been in a continuous uptrend here, month after profitable, winning month after month. Big day on Friday, going from 436 or so up to the 560. Really nice run. And another chart, one that we're going to start off with on both day and swing trading. Here today is Ford Motor Company. I used to work for Ford as a corporate statistician back in Dearborn, back in the early 90s, and I don't miss the Michigan weather, but I do miss the people. They're really smart, intelligent people at Ford, and it's an EV play, brilliant company. I think it's still early in its breakout cycle. It still has lots of room to run. Unlike Tesla, which I think is a screaming short on any weakness. And by the way, you may want to... I'm starting to nibble at SARK, right? It's short Kathy Arcs. Well, they renamed it or something, but if you want to short Kathy Arc, SARK has been going nicely up. Pulled back a little bit last week, but it's a recent IPO to short Kathy Arc's portfolio, of which I believe Tesla's a holding. Anyway, I'm long SARK, and I'm going to scale if it breaks the 41. So that's how to short technology in addition to SQQQ. Anyway, back to Ford. I digress. And I am still in long SARK. I'm short the market right now because I think the market may be due for a rollover. Anyway, if we look at the Ford Motor Company chart, brilliant 3-month chart, right? And if you look at the 1 year, it looks even more impressive. That's a year in Ford. Remember when I was calling it long over 10? I distinctly remember calling it long for my live room members at I think it was 1150 was a long call. And then again over 1550, right? So I called it long there. I called it long there. And we're up and away. I'm calling it long again over 2250, by the way. For you guys, I'll give that away. 2250. That's where I'm going to be buying it myself. Up maybe 22.3. Somewhere north of 22 makes sense for the Ford Motor Company. Now take a look at yesterday's chart. This is a 2-day chart that you're looking at. You have both yesterday's chart and today's chart. And this is a chart that I absolutely think is wonderful. I love that breakout. I love that breakout. And I love this cut pattern breakout up here. A lot of love for Ford Motor Company, right? Going all the way from 19 and change up to just over 21. And it's been a good $2 runner. A really good play in the Ford Motor Company. That is the strongest breakout in the entire stock market yesterday that I saw. It's a 45-degree angle breakout, which is the strongest one, as opposed to pop and drops like the S&P at 8:30, the CPI came out and it spiked up. And then in market, I told my traders it's going to drop. And sure enough, it hammered on down till around midday. And then the market bounced back up later. Sharp angles typically crash back down. Either down, pivot up, breakouts, pull back. 45-degree angle, so that's a whole nother critter. And that's the best kind of breakout to trade. And that's a nice 45-degree angle breakout with lots of love in it from Ford Motor Company. One thing to always be keen to trade is a breakout above the prior day's high. And you may have seen my award-winning technical analysis of Stocks and Commodities magazine articles, which I'm due to have to send in my newest article to them as well. 2-day high breakouts. A breakout above the prior day's high is always your best go-to play for either a gap runner, gap continuation, or a cut pattern breakout. And you can see Ford has a brilliant play here and a very good, very mature, very intelligent, very strong, consistent, which is the best kind of breakout out there. So if we take a look at the angle, this kind of typifies one approach to trading that I'm a big advocate of is trading this kind of instrument for a day trade where you're putting on you're benefiting from the major piece of the price action without overnight risk. Now, I did not buy this into the close because this particular pattern may well gap up to like 22, 23, even maybe 22 and a quarter come Monday morning. But it could also easily gap down to 20.8 or 20.5. So after a multi-point run up, that's good to trade during that day, but usually the risk is kind of high to hold it overnight. I'd prefer to sell the end of the day, bank the profit, and then re-enter on a subsequent day. One thing that you'll learn as a live room member at my Trading the Open live room is how to do this, where you're looking at capitalizing on an all-day long trade. And basically, this is a much, I won't say easier, but probably easier way to trade than the classic people who are scalping thousands of shares of cheap stocks, kind of gamblers, and for kids, that's not how to professionally day trade. A smart way, an intelligent way to do intraday trades is to trade relatively small share size and let it go all day. And then end the trade at the end of the day. Whether you're up or down, at least you know where you stand. And if it goes against you and you take a stop under support. For example, if you bought this at 20, you use the hard stop at, say, 19.5, right? So it's only 50 cents of risk, and it would have generated a $2, well, I should say, almost $1.50 reward. So it's got almost a 3-to-1 risk reward, right? If you buy the 20, sell the 19.50, that's 50 cents of risk in pursuit of a win up near the 21.40. So nearly a 3-to-1 risk reward ratio. What's good about this and what it means to you as a trader is that it's a very intelligent way to trade. It's kind of a hybrid. Hey, let me ask, how many of you do that where you do long-term day trades, if there's a good way to say that? For me, a normal day trade may be 5, 8, 12, 15 minutes. But a long-term day trade or an all-session long day trade may be an hour or 2 or 3, or even the whole dang session if it keeps going up like this guy did. Now, these are admittedly rare. They're hard to find. But when you do find them, you can scale in as well. But does anyone hold your day trades longer than, say, 20 minutes or an hour or 2? Because that's one strategy that I've been teaching for years, and I've got a lot of experience with it. I've been trading this strategy since the early 2000s, like 2003, maybe 2004. It's been a long time. We put on the trade in the morning, put a hard stop under support, and then just walk the blank away and try and not look at the market. Don't look at the market. Boom, 99 ba. Don't look at the market till after, say, 2 o'clock. And so either one of two things would have happened. Either your hard stop would have been hit and you're out, tough noogies, or you're still in the money. And then that's where it gets exciting. Then you can decide to trail a stop up close to guarantee the win and bank a moderate profit, or maybe sell half of it and then let the other half ride into the close. I give you a variety of strategies and techniques, and that's one kind of a hybrid approach where you're doing an intraday swing trade. Put on the trade in the morning, sell it in the afternoon. No hotkeying thousands of shares of cheap stocks required like the moron kids advocate. That's not how you day trade and keep your account alive. That's how you day trade and blow up your account, is trade thousands of shares of low float under $10 stocks that some guy in the chat room's front running to all of his victims and saying, I bought it, buy now. And then people buy, and then he sells to them and dumps the shares. Don't be caught up in that kind of false day trading live room that my competitors use. Don't do that. Make sure, number one, you trade instruments that have good volume and good volatility and great price action like this. By volume, you need to have at least 15, 20,000 shares per minute minimum volume so that you don't get front run by some moderator in the chat room who's already loaded up a bunch of shares and now he's telling everyone, buy now. Don't go out like that. Don't get caught in those kind of trades. Intraday swing trading, like what I teach, I think is a better approach because it gives you the benefit of, we do classic day trades too. There's plenty of, in fact, most of ours are the classic 10, 15, 20-minute intraday trades. But we also sprinkle in some all-day long trade setups as well. Wow, quite a few. It's good to know. Okay, one trader saying he's even used a 10 to 15-minute chart. Yeah, that's good. You can see especially strong. What I like about the 15-minute chart especially is the candle patterns. As for example, there's no sign of selling in this thing. On the 15-minute, there's no single candle pattern that would have had you sell. In fact, this is my favorite momentum pattern. I'd done a webinar with my longtime colleague Steve Nissen on candles recently, a couple weeks ago. And this is my favorite momentum candle pattern. We've got a small followed by a larger green uptrending whole real body candle. And Steve told me that that's, when you have three like that, that's called a three soldiers. Something like that. Three soldiers. I forget the name of the candle patterns. I just trade what I see. But we have small, medium, large increasing candles. It spiked up, nicely from here. And it ran up all the way from lunchtime, all the way up into the close. So your 15-minute candles do an especially good job of identifying candle breakouts and candle reversals and patterns that get you in and out of your trades. Now here, there's no evidence of strong selling anywhere in here. Might have gotten out on this bearish engulfing right there. But overall, it captured, the nice big majority of the trade. So really good patterns. And those are the kind of things I like to teach traders how to trade. Other volatile charts. LCIT had been up and down a bit. Did good for us on the first bounce. Marathon kind of did a rollover, never came back to life. AI was another one the trader had asked about. That was just a pop and drop, right? It ran up, and then it had a shooting star up there at the top, and then crashed all the way down, and really didn't bounce too much. Someone had asked about EFOI. Did a little bounce, but mostly a down chart, and CNTX. And those are all kind of epic sell-off charts. I prefer charts like this that go up. So anyway, we like to cover those and more in our live room experience. So let me know, does anyone have any requests for other swing trading charts? Well, I really like the ones that trader had mentioned, the PG and TOL. Kind of pricey up here. I personally like trading things under maybe $30, $40 a share. But this one's still good. It still looks like buyers are around and high volume breakout, crescendoing up there to the 75. Good trading, what you'll find. And one thing I found, the difference between, my best wins from last week versus the stops I took, the difference between the two is usually a function of things like the trading range and timing, the time of day of week, your re-entry strategy, and what exact signals you look for in terms of cut pattern breakouts or ascending triangles or just strong momentum kind of flagpoles that are starting to light up. How you put on your trades and how you manage your exits is especially useful, and that's one thing that I like to share in the live room. So I think that's about it. Good to hear it on cold. Let's see. What else? I think that's about it. Hey, Mira, thanks. You too. So to answer a question a trader had asked about swing trading, the most important rule that I found in doing so many thousands of trades over the years is to scale in or add to trades that end the day at 3:30, 4 o'clock at the end of the trading session are higher than the previous day's high. So I will virtually always scale in even if it's just a little bit. If I'm not too certain about it, I still make it a rule of thumb to add to my winning trades, and I always subtract out of my losing trades as well as a goal. So if the stock ends the day under, let's see, put it this way so you can, if the stock ends the day under the previous day's low, you sell down there. If it ends the day above the previous day's high, you buy some more shares. That's the number one. Very simple. You may have seen my stocks and commodities article on the topic. I made it kind of like a upside down traffic signal. You've got green light up here, yellow light hold if it's in the middle of the previous day's range, in the middle, and sell some, or at least lighten up on the trade if it ends the day in the red. Now, to address the ever-present FOMO, or that fear of missing out, because we all have that, right? It's like, the instant you sell, it runs up without you, because having had that happen to me so many times, you've probably had the same experience, right? So the solution to that, to build more confidence and more skill potentially in your trading, is to simply scale or position size, maybe in half, cut your trade in half or in thirds or whatever. So instead of, a single, 400 share trade, I may do 2 200 share trades kind of thing, or 4 100 share trades. So you incrementally scale in and incrementally scale out. That way you've still got some skin in the game and you're still alive and kicking if the thing races back up, and it doesn't do so without you, right? So that's the trick. That's the main thing for successful swing trading is, first of all, find charts that have nice ranges that aren't too extreme, not too narrow, but right in the middle. We've got a good moderate range that are trending strongly and are relatively tight and clean versus choppy and wavy, and you position size and scale accordingly. So good stuff. Hey Phil, let's see, question on SQs. The only problem about SQs, I was trading yesterday or day before yesterday, the intraday range is no good. I still like it for a bounce, but I think there's much better odds in TZA. Right? So technology is still moderately strong, but small caps, the TZA, the Russell, did a really nice run for us from 22 up to 32. And that's when I've been trading ever since then, right? I've been trading TZA on the way up, and I'm eager to get into it on even more size on a continued run up. If you take a look at the 1 year on TZA, you can see it's got really good upside. Maybe it doesn't show too well on this chart. Let's see. Okay, there you go. So during the last March sell-off, the split-adjusted share price of the Russell Inverse Leveraged Bear ETF TZA was way up at 800, 900. Now on fire sale for only a fraction of that at $30 a share, 28 a share. So I'm looking to scale into this aggressively, as somebody did with that 120 million share. You can see lots of volume in this one. So anyway, big upside in this, just like the UVXY. Kind of zoom in on the 90-day. And see we got quite a flurry of buying. It came back down. You buy the dip, sell the rip, right? That's where I was accumulating shares, and I was selling up here in the swing, and then I rebought just a couple hundred, just a teeny, a couple hundred shares to get started on Friday, right after the close, and I will right near 15, and I'm going to scale up over 16, 17, 18 with an exit target near the 22, 24. So that'll be another swing trade setup. But a superior chart is obviously TZA. They are selling small caps more than volatility is going up. So knowing how and where and which of these things to focus on is one thing that I like to teach in the live room. So anyhow, y'all have been great. I hope that this has been instructive and insightful and hopefully intelligent and coherent and meaningful and gives you some good trade ideas. Congratulations to all of you who are live room members, and those of you who are thinking about it, go ahead and join. And I'll see you guys in the upcoming week ahead in the live sessions starting Monday. So join at trademastery.com/live. Best wishes for successful trading, and wanted to wish you all the best for a peaceful and relaxing weekend here as we're celebrating the holidays. Closing out yet another nice year here in mid-December, coming up on mid-December 2021. So I'm Ken Calhoun, and want to thank you for your time. And big turnout. Wow, big turnout today. Thanks for all of you for being here, and I'll see you guys in our live room. And we do them on Zoom now, so like this. So the audio and video quality is exceptionally good. And the neat thing about the live room is it's like being in one of my live seminars I used to do in Las Vegas or New York or California or Texas or whatnot, or here in Colorado, but without the airfare and the hotel expense. And you can ask me questions, get honest answers, ask about your own tickers of your own choice. And unlike the places with thousands of people, we don't have thousands, at least I don't. I do have the time to answer your questions. So you get individual Q&A time with me personally in each live room session. You can ask up to a few questions at least per session, and I'll give you a good straight answer. So look forward to seeing you guys in our next session. Well, thanks for the heads up. All right. Yeah, good points. All right, thanks. All right, well, y'all take care. Have a outstanding, peaceful weekend. Join the live room, and I'll see you next time. Bye for now.